Hello everyone, Mike Arnold here, co-founder Path Trading Partners. Quick update technical tools series. We're going to go through trade expectancies for trading cryptos. Should you want systems 90% winners? Big, can you get them? Let's go into it. So this is what traders want to know. And I'm not picking on anybody, we're just giving you information. Traders want to know. We get asked this all the time. What's your percentage winners? Do we know the answer to that? Yeah, of course we do. We know it by strategy. We know it by time frame. We know it by day of the week. We know it by instrument traded. When I mean instrument traded, it could be the foreign exchange market, it could be stocks, it could be futures, it could be cryptos, it could be the different cryptos. We know it by time frame. Are we trading 1 hour, 4 hour, 15-minute, daily, weekly charts? You should have it broken all down by that once you get to, really into trading. We know it by our strategy. Strategy by time frame. I know the percentage winners based off daily long double bottom trades in the different cryptos and stocks and everything. Day of the week. I've even had to incorporate my trades for Saturday and Sunday because you can essentially trade cryptos whenever you want. I know it by session. We separate things: US session, European session, Asian session. We slice and dice these data a ton of different ways. Does percent winners matter? Does it matter? Yes. Are we going to tell you what it is? No. It's very misleading and incomplete information. You got to realize that first. Yet most beginning traders want to know it and will even purchase trading systems based on it. We are here to set you straight. I even get things in my mailbox. 95% winners trading this elusive option strategy. Yeah, you're selling out of the money puts that mostly expire, yet it can be a very risky thing. If people are worried solely about percenting winners, they're missing the whole picture. They just want like some guarantee. The higher the percent winners, the more I'll be guaranteed to make money. That is not necessarily true. Let's take a look at 90% winners. If we're going to tell you we had a crypto trading system that produces 90% winners, would you want it? Most beginning traders will say yes, without asking any more questions. They'll just say, yeah, give it to me. I want 90% winners. How about if we were offering a system that produced 25% winners? The same traders would say, no, I don't want that. I want 90%. I want 95%. I want 80%. I don't want 25 or 30 or 20. The problem is there's not close to being enough information to answer in either case. You need to get more information. So we're going to go over trade expectancy. What's trade expectancy? Trade expectancy is calculated by the average profit times the probability of winning minus the average loss times the probability of losing. In other words, trade expectancy is the average amount per trade that the trader can expect his or her methodology to produce over the long run. Let's take a look at it some more. So again, trade expectancy, you have average profit times probability of winning minus average loss times probability of losing. Probability of winning and losing are quite simply the win-loss ratio of your system or methodology. So if I say it's 90% winners, probability of winning is 90%, probability of losing is 10%. If I say 25% winners, probability of winning is 25%, probability of losing is 75%. Pretty straightforward. Average profit, what is that? The average profit can be calculated by taking the profits generated by a large sample set of trades and calculating the average profit. So let's say I have 1,000 trades. I'm going to add up all my profits for the specific thing I'm analyzing. Maybe it's a specific trading system, and I'm going to divide it by the 1,000 trades, and then I'm going to have the average profit. Average loss can be done the same thing. I'm going to take 1,000 of my losing trades for that exact system and take my total losses and divide it. It's a down and dirty number. So let's go back to 90% winners. Let's say it has an average winner of 100. Fantastic. Sounds good so far. Now let's say it has an average loser of 1,000. What does a trade expectancy say? Well, we do trade expectancy, percent winners, 90% times 100 minus 10% times 1,000. That's 90 minus 100. Your trade expectancy is minus $10. In the long run, you will expect to lose money if you keep trading this. Yet a lot of traders and a lot of people will sell systems based off of this because you're getting 90% winners and people don't realize that. They won't tell you the average loss. They won't tell you that. So 90% winners, how can I lose money? And I've seen it all over the crypto space. These systems are insane. They take a lot of small winners, especially when everything's going up. Up, up, up. Well, it's great when it's trending up, but when you get a big pullback, like we did a couple months ago, that's when these losers come in, and that's when you take your big loser. And hopefully it's just a few, but it wipes out everything you made. So trade expectancy minus $10. And guys, again, this is excluding commissions or trading expenses, and it's excluding any slippage you may have. So that's just not included. So it could be worse than that. 25% winners. Let's take a look at the 25% winning system. Let's say it has an average winner of 400 and an average loser of 80. What does the trade expectancy say? Trade expectancy, 25% times 400 minus 75% times 80. 100 minus 60, $40. So yeah, you're only winning 25% of the time, but if this was the system, you can expect over the long run to make money. You're going to average out around $40 a trade, separate from slippage and trading costs. So even though it looks bad, 25% winners, this is a better system than the 90% system. And these are just examples. Yes, you can have 90% systems that make money. You could have 25% systems that lose money. Just giving you some extreme examples. What does all this mean? Well, let's get into the reward to risk ratio. The reward to risk ratio is calculated by taking the average winner and dividing it by the average loser. So for the 90% system, reward to risk ratio is 100 divided by 1,000, or 1 to 10. For the 25% system, reward to risk is 400 divided by 80, or 5 to 1. If you know the reward to risk ratio and the percent winners, you can calculate the trade expectancy of any methodology or system or trading style. So here's a nice little table we set up for you. Reward to risk ratio for break even. And this does not include slippage or trading costs and commissions or any other fees based on this. So if you have 1-to-1, if you have a 50% win rate and a 1-to-1, which means if, let's say for every 100 you make, it loses 100 when you lose, that will break even. Figure that out. When you win, 50% of the time you're making 100. When you lose, 50% of the time you're losing 100. Scratch system. Now, as you go up in win percentage, what your reward to risk ratio actually goes down. So if you have a 75% winner system, you only need to win your reward to risk for break even. You'd have to make $33 for every $100 losing trade. That's what this is telling you at the 75%. Down at, let's say you have a 30% winning system. Well, that would be 2.33 to 1. So if you were making 233 for every 100 you lost, you would be breaking even. So as long as your numbers are better than these, so if you have a 65% system and it's at a 1-to-1 reward to risk, that's better than 0.54 to 1, your system's going to make money, excluding slippage and commissions. Important to know these numbers and to be able to gauge. And if somebody can't show you the math behind their system and they're just touting percent winners, I don't care about it, because it's only part of the picture. Look, you could have a great 40% winning system as long as if it's 2-to-1 reward to risk, well, that's better than 1.5. You're going to make money should that system hold up over time. Not only the numbers. This is just a quick introduction to the kind of metrics a trader needs to look at to evaluate a system or methodology. There are many other numbers and metrics an astute traders needs to also evaluate when determining a system or strategy is suitable for them. There is no one metric that will tell you if you will be successful. So please don't just go off, I need to know percent winners. I hope this gave you some information about it. You don't even just need to know percent winners and reward to risk. You should be looking at other things like losing streaks, winning streaks. You'll do some Monte Carlo simulation on these numbers. Maybe you're going to be looking at the Sharpe ratio. Maybe you want to look at the distribution of the winners and losers. You want to look at the variance or standard deviation of them to know how they fit and what you should expect in the long term. These are all kind of things as you evolve as a trader, you're going to look for and get more and more information, and we will go into more and more of these in the future if everybody is interested. So we are Path Trading Partners. You can follow us on Twitter at path_trading. You can like us on Facebook. You can come to our website, pathtradingpartners.com. Anything we put up there for free. We're not trying to sell you anything. We give away most of our stuff for free. Just look at our YouTube channel because we want people to be informed. Please listen to our podcast, and we also have blog articles out there. And ask questions, like us, comment on us, give us thumbs up. If you find this information helpful, we're here for everybody. We will talk to everybody soon. Thanks, and have a great time trading, and especially trading the cryptos.